recap everything that's taken place just in the last few minutes here. A payrolls reading that showed the first decline that we've seen since August of 2003, with job declines of 4,000 in the month. We've also seen revisions to both the June and July, those revisions to the downside. The unemployment rate holds at 4.6%. In the wake of this, the dollar's weakness has been exacerbated. Prices of treasuries have soared, the yield on the downside. The expectation of a 50 basis point rate cut now rises to 74%, nearly double where it stood prior to the release of these numbers. And anecdotally, gold prices zooming past the $700 level. So to talk about all of this, let's welcome Todd Crosland, the founder and CEO of Interbank FX. Todd, got you on a busy day, I'm afraid.
Yeah, quite busy.
And of course, Nick Hastings from the Dow Jones Newswire. So Todd, put this number in perspective. I mean, does it take it out of the Fed's hands? Is there no recourse but to cut rates at the September 18th meeting?
Well, the market had really fully priced in a really 100% chance of this happening, later this month with the Fed rate cut. I think this is just the nail in the coffin, that this is a surety that that's going to happen this month. So I think when we see the rate cut 100% priced into the market, you're going to see a dollar weakness as that interest rate differential becomes more significant, especially against the European currencies. And right at the number, we saw about a 100-point drop in the dollar yen. And so we're seeing weakness in the dollar all across the board right now. And
Todd, given that both the Bank of England and the ECB held the line on rate hikes this week, is a rate differential story that tilted against the dollar at this juncture?
Well, I think it is. That's why we're seeing weakness in the dollar, because the Fed definitely is going to have to cut rates to help the situation that we're in right now. And if you look at the GDP numbers forecast for the U.S., it's still lower than any of the European Union or the Bank of Japan, and even right now than the Bank of England as well.
Let's bring in Nick Hastings here. Nick.
Hi, Todd. Todd, the one thing that intrigues me, I think I mentioned it earlier, is that okay, the dollar will obviously suffer because of the interest rate differential when the Fed does cut interest rates. But in terms of the credit crunch, will this be enough to extract the concerns in the market and really perhaps ensure that we don't have the sort of reversals we've been seeing, the unwinding of carry trades and all that stuff? Will that actually come to an end now?
Well, I think, as long as there's this volatility in the financial markets, I think that's going to continue to put pressure on the carry trade. We saw this back at the end of February with the correction in the Chinese stock market. That put a shiver through the financial markets, and then the yen rallied on that news. And the yen's rallied on this financial turmoil that we've had in the global markets as well. So I expect this volatility, even with a Fed rate interest rate cut, I expect this volatility to continue. And as long as there's global volatility in the financial markets, I think that will continue to put pressure for people that will become more risk averse and exit their carry trade positions.
I mean, do you think that this in itself essentially will be enough? Okay, you're saying you're expecting volatilities to continue for some time. But do you think that within itself, I mean, how many more rate cuts are we going to have to get from the Fed to really bring an end to the credit crunch and the crisis as well, the turmoil as we're seeing it at the moment? Also, in terms of things like Europe, would we expect to see actually the Europeans eventually have to cut their interest rates and not just put them on hold as they did yesterday?
Well, I think the European Union's in a little different situation. They're facing inflation pressures there, and they're having stronger GDP growth than the U.S. is having right now. So I think the European Union, they really aren't in the position to cut rates at this point. But the U.S., I think we've got a ways to go on this credit crunch through the financial markets, and we'll have to see really how this plays out with the rate cut this month and how the financial markets react to it, and then how especially the credit markets react to it.
And Todd, with regard to the expectations for a rate cut this month, we're seeing Fed funds futures saying there's now an overwhelming chance that the Fed is going to have to move to a 50 basis point rate cut rather than just a 25 basis cut. Do you think the market's correctly gauging what's going to happen?
Well, this number clearly changes the whole picture on what the Fed can do in this situation. If you look at they actually revised the July job growth numbers down by 24,000 this morning as well. And so with that revision down in July and now this negative number in August, we'll just have to see how the Fed reacts to it. But the 25 basis points is assured, but they have room for 50 as well, it looks like.
And given that, Todd, what's the and I'm looking at what the equity futures are doing. Simply fallen out of bed since this number was released. The prospect of a rate cut notwithstanding, where are traders going to go here in the face of this kind of expected volatility, this kind of signs of economic turmoil? Are they simply going to load up on the euro, or is there another safe haven for them to play in?
I think as in any of these crises that we've seen, that the yields on the treasuries are going to go down. And that's really the safe haven investment for traders around the world. They'll be going into U.S. Treasuries.
Got it. Well, we want to extend our thanks to our special guest. We've been talking with Todd Crosland. Caught him, of course, on a very interesting day. Todd joined us from Interbank FX. Todd, thanks very much. And, of course, to Nick Hastings from the Dow Jones Newswire. So, once again, a surprisingly weak non-farm payrolls reading just sets up expectations that the Fed is going to have to take action at September 18th. Next week, we'll be breaking down the reaction to this data and plotting the course for the Forex market. Sit down with us next week.